interview or live or a special edition. You can see my excitement. I have a really special guest. I have Shani Curry. She's an acclaimed credit specialist, and I'm so excited because she's a woman and she's a person of color, and we need more of that in our community. And she's actually has been featured on NBC6. So if you've seen any of the people that have come on my show, they've always have something to impart to our community. And so I wanted to welcome her because she's going to be one of the panelists for this Saturday's home buyers workshop. And she has so much to offer, so much to share. Guys, lend me your ears for 15 minutes or less. So let's get into it. Thank you so much, Miss Shani, for being on the show, Chat with Kattt.
Hi,
Congratulations.
hi, Chat with Kat. It's really nice to be here with you. Are you able to hear me?
Oh, yes, I hear you
Okay,
just
perfect.
fine.
Perfect.
Perfect. So tell the audience a little bit about you, because I know everyone knows about you, but there's always someone that's been under the rock for a little bit, and they
Oh,
just
that's
happen to
fine.
pop out.
Absolutely, that's fine. So I have been helping my clients build their credit scores for the last 15 years.
Hmm.
I have a passion for real estate as an investment tool, as a way to make sure that you have resources to go into retirement with, and you have resources that you can transfer over to your children. And one of the ways to do that is through real estate. So that's largely what my platform is about.
Awesome. What inspired you to go into this space? Because you don't hear a lot of people go into credit, especially like women. Like,
Mhm.
and you to the level that you've gotten to such a height that you have a huge following, and
Mhm.
it's actually been featured on the news. So,
Mhm.
what inspired you just to go in that outlet?
So I have a background in banking. So I was
Hmm.
a banker for 5 years, and that gave me a crash course in just understanding human behavior when it comes to the things that they buy and the things that they don't buy.
Interesting.
It gave me a crash course in understanding lending. So I took all the things that I learned as a banker and I compiled it as a way to help individuals reduce debt, to help them improve their credit score so that they could purchase more property.
Nice. So I think I read somewhere on the internet that you got your first property at 22.
Yep, I purchased my first property at age 22. I was actually still an employee at the bank. I was working for Wachovia, now turns Wells Fargo, and
Wow.
largely individuals who are wanting to purchase property when they're younger. I think it had a lot to do with who my friends were. My friends were largely older than me, so that's what they were doing. They were
Mhm.
purchasing property. So you're going to do what your friends do. If your friends party, you're going to party. If your friends are buying real estate, you're going to purchase real estate. So it was largely just the influence of my friends as well as my family. So I would say that I did come from a family that really valued homeownership. I think all the adults surrounding me own their property. So I think like it was just like the natural progression, because that's what people did. Some people buy cars and then other people buy houses.
Oh, exactly. So I know I'd have you for a set period of time. So let's
Yes.
just dive right in. So
Perfect.
credit, all things credit, like I don't even know where to begin.
hmm
What trends do you currently see in this market versus what you saw maybe pre-COVID?
Mm, let me see. Interesting enough, I'm not really seeing a lot of differences in um pre-COVID. The only main difference that I might see is credit before COVID and then credit now
Hmm.
is that those foreclosures are starting to hit the property,
Hmm.
starting to hit the credit reports. Many of my clients are getting modifications. So them going through the process of needing to have their mortgages modified, those type of negative impacts are hitting the credit scores. I'm also finding that just in this economy, just the affordability of things is causing individuals to just get into more credit card debt largely.
Yes.
So I am seeing that, but I saw that in COVID too. So I can't say that it was different just because there was just some extenuating circumstances at that particular time, because, people were on lockdown. So sometimes they were spending more or they were dealing with sickness or job loss. So that would cause them to have to use their credit cards a little bit more. So right now we have the economy being driven by inflation, the cost of things just not as affordable. So you have more people living on their credit cards, as well as with this administration and all the fluctuations and consumer confidence is also causing people to have more fear. So they're spending more money or not working as much because they're anxious. So you have all of those factors that, at some point is going to hit the credit reports.
Yes. Now you
Mhm.
mentioned that people are using their credit cards more, credit cards, they're living off of their credit cards more. And I've noticed that nowadays when I get the mail, I'm offered credit cards, I'm offered I'm pre-approved for something. Are you working with clients that may have overextended themselves? Do they reach out to you for some sort of counseling on how to reel themselves
Yeah.
back in?
So, mostly individuals will reach out to me if they have gone through job changes, and they might have reduced their income, so they created a lot of debt. Some of my clients may be dealing with a repossession, might need to be purchasing a new car, might be needing to purchase a new house. Those are all trigger points that individuals would want to work with me. So I have a few people right now that need to buy cars. I just had one of my clients who was at some point, she's spending maybe about $600 a month on Uber.
Uber.
And I convinced her to find a car that she can purchase for cash. She bought one for $2,000.
Oh, wow.
Her credit scores have gone up. When she started with me, she was like at a 567. She's now at a 663. And then she got her first credit card for $6,000,
Oh,
right?
nice. Good
So
for
her
her.
her utilization on her credit scores has changed, and just from her being willing to kind of practice that discipline, she now has, a car that she doesn't have to, pay for. She's not, so she's had about 2 weeks. I'm interested to kind of keep following her to see um, what happens with the car, because a $2,000 car, it might have high miles, it might come with tech issues, but I'm going to see how long she's going to be able to hold on to the car and how that supports her in replenishing her savings, because her credit scores are definitely higher. So if she wanted to buy a car, she could. The challenge is right now is that buying a car, the average car payment on a used car is 563, and on a new one it's $700.
Exactly. So you're
Yeah.
definitely big on credit, on education. So I just came from your live, which was really interesting. It was so awesome.
Mhm. Thank you.
It's funny because I'm always interviewing people. So that was the first time someone interviewed me.
That's good.
So what is the biggest myth that you would like to dispel when it comes to credit?
Um, I don't really have any big myths that I would like to dispel about credit, per se, because I can't really think of any myths. I can think of myths about home ownership. I think some people think their
Okay.
credit scores have to be higher than what
Right.
they actually have to be. I
Mm-hmm.
myself, when I purchased my first property, I had a 650, which is not a 700. It's not a 800. So I think sometimes people are waiting to get that perfect score before they allow themselves to get into the market. But I think that if you minimally have a 580, that they should meet with you as the lender so that you can, communicate with them about things that they can do. And I remember when I went to go purchase my property, I didn't have the scores at the time. I think I might have had a 620. So it took me about 3 to 5 months to go ahead and rebuild my credit so that I can be able to qualify for the house. So sometimes that first little no, or being at a specific score level, that's good. That way individuals can educate you and tell you what you need to do.
good. Let me ask you this. What are some smart ways that what people can do to raise their scores if if they're preparing to buy a house like in 6 to 12 months?
Number one, just look at it, because if you're largely operating in avoidance, if you don't know
Okay.
what your scores are, then you can't really do anything about it.
Mm-hmm.
But if you were to look at your scores, then that would give you that first space to let you know, okay, can you do it in 3 months, 6 months, 9 months, a year, 24 months? The next thing is to look at any old stale debt, stuff that should have come off with that 7 year law. See if you can just get some of that completely removed. And then the third thing is going to be utilization. So looking at your credit card usage, if they've given you $1,000, then you probably should not be using more than $300, because 35% of your credit score is based on your payment history. So you want to make sure that you're keeping good history. The main thing that you don't want to do from now into purchasing a property, you want to make sure everything is definitely on auto pay, because late payments on your credit report means anywhere between 25 and 50 points each time
Wow.
that you're late. I mean, each
Really?
single time. So you're late in January, late in February, late in March, you can almost call that 75 points. Credit score is going to go down. So if you're thinking of purchasing a house, or you need that first $5,000 credit card, then the first thing you're going to do is establish auto pay with the cards that you have right now.
That's a very good one. Man, that was
Yeah.
really, really
Yeah.
loaded. Wow. Now, now you've often talked about the emotional side of money.
Hmm.
Why is mindset such a crucial part of wealth building, especially to in our community?
Um. Oh, so I don't know. I think your just your mindset, or your mentality, or more of like your relationship with money, is probably something that you constantly have to, be aware of. Take a look at your bank statements. If I take a look at your bank statements, I can tell you what's most important
Mm,
to you. I'll know, like, if you value convenience because you're always going out to eat. I'll know if you like luxury if you go to really expensive restaurants. I'll know that you value, a certain type of car because of your car payment. I'll know, how you value your children based on what you save and what you invest in. I'll get a lot of data. So I think if you allow yourself to look at the data, it'll really help you shape your habits.
let me ask you, what is the biggest mistake people make after pulling their credit report?
Not doing nothing. Just look at it on Credit Karma, and then just like, oh, that's the worst thing. Because yeah, that's probably going to be the worst thing. I'm going to lose this phone. I've done all
Oh,
that I
okay,
could
okay.
with charging.
Lastly, is there anything that you would like to say to the people before we log off?
Thank you very much. I hope that I was able to share something about building your credit scores. Hopefully, if you have not decided to purchase a house, that you are now thinking of it. If you need more money motivation, you can find me, Shani Curry, on all social media spaces. I do really great educational videos about building your credit scores and purchasing property. So thank you for your time, Kathleen. I think you have a wealth of information. I'm looking forward to working with you at the workshop.
Perfect. So again, guys, she's going to be at the workshop this Saturday from 10 to 12 at the El Dorado at 4200 Northwest, 167th Street in one of their showrooms. Thank you, Shani. Thank you guys for tuning in this special edition of Chat with Kat. Thank you and see you Saturday.
Thank you.
Bye.
Bye.
All right.